Hey guys, Mike here. So today we can answer all your questions and comments. Feel free to participate yourself, but we'll talk about the cycle high of this stock market. We're going to go into how in the world are all these economies sitting in recession. If you don't know about that, I'll let you know, and I'll tell you exactly why they can be sitting in recessions, but the stock market is doing something total opposite that you may be unaware of if you don't watch my videos normally. And then a bunch of other questions you had. So as usual, let's just get right into it. Again, feel free to participate, ask other questions if you like. Now, we're going to start off with the capitalist here, and he says Britain and Japan are officially in a recession. The bug keeps on spreading, and it's only a matter of time before it knocks the U.S. off its feet. I would start to be a little cautious when investing at this market peak, as the yield curve is telling us it's a matter of time. And so I'm sure some of you are wondering what he's talking about, and it's actually a longer list than that. You can see it. All these countries have officially claimed that their economies are in recessions. What you probably are unaware of is the fact that their stock markets have recently hit all-time highs or new 52-week highs as this has been going on. And this is absolutely normal. If you see here, we were at an all-time high before we hit 2020, and we had this happen multiple times. If you go back, you're always near all-time highs before a recession. I usually call it the last hurrah, whatever you call it, the degree they just shove this thing up before they sell it all. But, you know, this is absolutely normal to see this, not just here, but in other countries. And when we go over some other examples, you'll see, I mean, .com is a little different. .com is the weirdest crash I've ever seen on so many different levels. But again, they drove us up to all-time highs. All those worthless companies started crashing even before the recession ever hit. But when you go back to other times, all-time high right there, there's a recession. And usually it's almost like you see a double top. You'll see a high, it'll sell off, come back up to the old high, and then sell down. So it is absolutely normal for this to happen. Don't be freaked out by it. So, you know, that's just the way it is. The stock market goes up what? Over 70% of the time, 72, 73% of the time, it is going up. Okay, and so they will ride this baby up all the way into that recession. That's just the way it is. And what they're talking about, you know, with this yield curve is, if you don't know it, and this usually has a lot to do with it, this right here is the 10-year, 2-year. You can also do the 10-year, 3-month as well. That black line, I call it what they call the doom line. I call it that, at least. When that crosses up over the zero line, that's when things usually start to break, okay? And that's when you'll see the market start to head down. It gets very nervous about what's fixing to happen here, okay? And you go through many examples of this. Here's the .com. Again, the .com was the weirdest, but you can see this thing uninverting. Market starts to sell off. We end up going into an official recession. Again, you won't know it's an official recession till a year later when they actually announce it. They may come out, but as a group that does this, right, on many different metrics. And so we won't know for a while that actually happened. You'll just be sitting there going, wow, it looks pretty bad. And that's why I do a monthly video on it with certain metrics. Because you can see down here when it uninverts, same thing, market starts to sell off. And so this is absolutely normal. And to go farther back, I actually got to go with the 10-year minus the 3-month to go farther back, because this one doesn't go far enough back for me. But when we pull up the 10-year, 3-month, which to me has way better accuracy, you can see kind of the same thing, right? I mean, it's uninverting. You go into recession, uninverts over to the right. We're in recession, market sells off. And so, you know, this is what they're talking about with this yield curve uninverting, and while the market's still partying hardy because it still hadn't crossed that zero line. So why worry about it, right? But when it crosses the zero line, you'll probably hear different rhetoric out there. You'll hear stuff saying, oh man, this is when stuff really breaks in the financial system and everything. And so we'll see if that happens. That's what we got to figure out. But, you know, it just comes down to the economy is not the stock market, not just here, but in other countries, okay? And so, again, hope you understand that. If not, feel free to ask more questions. I'll try to explain it now. And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. The next one says, question for you. You always talk about how the market goes as Apple goes. However, is that still the case, considering the market has been moving up despite Apple's pretty stagnant the last few months? Do you sense Microsoft and NVIDIA have gained so much market cap that they could hold the market up if they keep rising, even if Apple falls? Great question, and the answer is absolutely yes, it could happen. And when you look at Apple alone, I mean, this thing's in this wedge, right? It's been wedging up forever. But what's funny is, if you go down here to the little L button, which is a logarithmic, you click on that button right there, and you scroll out to, we'll say, the 2-week here, you can see, actually I'm going to go to the monthly, you can see this thing has been in a rising wedge, the longest rising wedge in history. Okay, it goes all the way back to 2000, the .com bubble. And you can see it's respected that top line and bottom line many times. Where's it at right now? It's been just bouncing off that bottom line forever. Rising wedges, of course, when they break, that's when you usually get a really nice fall. That's why they won't let it fall, okay? And so, but that's usually what this does. But this is the longest rising wedge ever. And so, you know, when you look over here about your question about Microsoft and NVIDIA, you can see when it comes to the weights, right? So I was talking about, I think Microsoft needs to be number one, and that's what they're making it, right? This is the SPY ETF. Look at Microsoft's weighting now. Okay, Apple was coming in 2024 with the heaviest weighting. Microsoft eclipsed them. NVIDIA, if it continues to go up and hold a lot of market share, absolutely, it could do that. I mean, these things get reweighted, right? And you even saw Warren Buffett, which, by the way, don't freak out about this because, you know, he sold shares, but let's be real. Just so you understand for the record, he has sold shares many times. Okay, you can see it right here, right? 14.7. Berkshire Hathaway holds 900 million shares plus. So, I mean, that's not a big deal. But they've sold many other times. And when things get frothy, they tend to do that to put that money to work somewhere else, right? Because it is being stagnant right now. And understand what you're talking about is, yes, Apple going to come down, right? Not it's going to fall and crater anything. But also the other scenario is you see all these other stocks, right? This is the equal weighted S&P ETF. All of a sudden start to participate. And you can see it's almost all-time highs. And when it gets to all-time highs, it flies, which means a lot of other stocks start to participate, right? The breadth it expands outwards. And so if this gets up here, you can absolutely see a lot of other stocks start to push the stock market up, okay? And so just keep that in mind. That could happen. So yes, if Apple just goes stagnant or stays in a range, which a lot of times it would do, the others will start to take over. That could absolutely happen for sure. Okay, so great question. We'll have to see if it happens. That's the big question. Now, next one here, I definitely agree with you that we are not even close to the cycle high, but it worries me why so much money is on the sidelines. Can it be because they expect a big correction? That could be, of course, but also, I mean, you should understand, they're not just sitting there in cash doing nothing. They're collecting money on this cash, right? I mean, especially if you're a rich person, you got a couple $1 million, and you're collecting a 4% almost risk-free, right? Look at these yields, you know, and you're getting a, what, 5.4 for the 2 month? That's crazy, right? 5.4 for a 4 month, you know, 4.3 for a 5 year. And so it isn't just sitting there doing anything. And again, they're looking most likely at this. Their advisors are, right? Saying, okay, well, we hadn't uninverted yet, but if we do, might be a good chance. So maybe we don't want to go risk on here, whatever. Play it safe and just keep collecting this 5%. Even in like Fidelity accounts and other accounts, they'll pay you 5%, you know, for your money just to sit there, even if you're not investing it, right? And so, again, it's not just sitting in cash doing nothing. It's not sitting under somebody's bed or anything. And so, yeah, that could be the case because we hadn't collected interest on money in years, right? Since the Fed took over, they kept suppressing interest rates, right? So people are enjoying that risk-free portion of it. And so that could be what's happening as well. Just keep that in mind. Now, next one says, do you use a log scale in your charting? Are there any conditions where you do or don't use a log scale? I use, and by the way, good question, I use log scale for one basic reason. Is if I'm looking over a long period of time, right, it smooths it out. And if you come over here, and this is really good to use because, again, here's the NASDAQ, right? When you scroll out on this thing, when it's just a regular chart, what are you going to do with that? I mean, there's no way to put trend lines on this. You go to logarithmic, though, look at that. Smooths it out, and this is a very powerful tool. I did a whole video on this, and I'm going to show you a channel even having Discord on this and how it works. Because now you go, wow, now look at this. I can see some connections here. I can see that if this line, if I start a line from right here, a trend line, I bet you this thing touches so many times, right, to show how well respected this line is. And you look at this. I mean, for years, once it got to the top of that, that's where the top was, right? Just kept chopping, and then once it skipped over, and then once it broke it in 2020, it started using it as what? Support. Okay, and then we broke down below. So what do you think is going to happen next time we touch this? It's going to show as resistance. If we break above, that is super bullish, right? I mean, that's why in the Discord, I mean, I have this channel because I was sitting there going through this, you know, called long-term trend lines, and you start going through these stocks, and you can find these stocks. I mean, all different kind of stocks in here. And I'm trying to find Dollar General because that was the one I put out for a buy simply because of this logarithmic line, which is right here. Look at this. Dollar General got destroyed, but guess what? Look at that meltdown. As soon as it hit that trend line, it did nothing but bounce and go up. Okay, so yes, that's the reason why I use it. Put in the comments if you use it for something else, but that's the reason why I use it or what I use it for and stuff, and it is extremely powerful. I hope that helps you. Now, the next one says, I have a question for you. Why is it always so hard to purchase stocks in pre-market between 4 a.m. and 6 a.m. And the big thing is this right here, guys. It's volume. Okay, it's volume. And you can see it. I'm going to zoom in on this for you. This is volume. Look at this. This is pre-market and after hours. Do you even see hardly any volume bars? This is regular hours. All right. So yes, I mean, imagine somebody trying to fill a $1 million order. And you got your in there. You're trying to buy 2 shares or something, right? But this right here is why. Straight up just the volume. And put in the comments if you think it's for some other reason. But that's really your main problem if you can get it. But I think there's ways you can get around that, but I'm not going to talk about it because I don't trade in pre-market. But again, if you do trade in pre-market, put down at the bottom if you got a secret on how you get your orders filled very fast. And the last one I want to finish up with was you guys made some great points about margin, right? Because Tom Lee had come out and said, oh, we can't bottom until, the margin starts to go back up and all this stuff. And there's a couple reasons you guys pointed out why those margin levels aren't anywhere near what they were in 2020. And then somebody had a question about it, which I will explain. And so one of you guys said margins dropping with interest rate hikes, right? Because there's more interest. As you can see right here, somebody even put, due to high interest rates on margin, my broker is at 13%. So that's a huge amount of interest you have to pay. Plus, 0 DTE options, baby. No need for margin. I love that one. And then the question was, I don't understand how margin impacts stock price. Never had used margin. And it's not about the margin per se. It's about the purchasing power, right? If you have 100 billion, 200 billion, 300 billion sitting out there and it all of a sudden starts coming into the market, flooding into the market, what do you think stocks are going to do? And I'm talking buying power, right? They're going to go up, okay? Because if I buy a stock for $1, next person buys for $1.01, next person $1.02, right? That's how you drive stocks up. That's how they go up, okay? And so what they're saying here, though, you don't need it, one, because the interest rate is a lot, but you have 0 DTE options is basically doing that already, because when you buy that option from the market maker, they're selling it to you, right? They're trying to remain neutral. So what they're doing is they're going to make their money, but they got to hedge. If that stock starts to go up and they start to hedge, what are they doing? They're actually buying the stock, right? That's what they're doing because they sold you the call, right? You got the call, so the stock goes up, you're making money, right? So now they're like, okay, let me buy the stock that hedges them, and as it keeps going up, that's why you see Tesla. I've showed you examples multiple times it's happening. Meta happened to just the other day. NVDA it keeps happening to. They keep just flooding in with these call sweeps, and boom, it keeps going up. Plus, what else happens is it starts to go up, short squeezes, right? The short sellers are like, man, we just got to get out of this, and they'll start to cover, which also drives the stock up. So it's kind of like people are saying it's true. The 0 DTE options I've showed you, they make up like 50%, if not more, of daily options now, which was never the case before any time in history, right? It just started getting popular in 2020, and they've been around for a long time, but this wasn't popular until 2020, and now they've gotten even more popular, right? And they keep rolling out different products and different stocks where you can get 0 DTE options and stuff like that. So, that's, I think, also, and another thing that might be happening also, as people are using those leveraged ETFs more, maybe, right? You got a 1.5 on Tesla, I believe. You got 1.5 on NVIDIA. All these different kind of areas you can go to without having to take margin and still get a great gain. And those leveraged stocks, ETFs and stuff are cheaper, right, than the actual stock themselves by a country mile. And so that could also be something taking the place of margin. But again, we'll find out if Tom Lee is correct. If you watch my video the other day, he's saying it's got to get up. So what was it? July's high, I think it was. That's where we started to sell off last time. And so it's like another 20 or 30 billion. And so again, we'll see what happens. And so hopefully that answers all your questions. I really appreciate it. Again, I still enjoy this video and stuff. And so feel free to put down in the comments if you got any more questions, or feel free to put any input on these questions and comments. Always appreciate it. And I do read every comment. I just don't comment back to every one of them. And so just understand that. And usually I'll put in there, I'll put this in Saturday's video so you'll know it'll be in Saturday's video. So hope you guys got something out of it. Tomorrow I actually have a video coming out. Monday's going to be the setup video because we're closed for the stock market on Monday. But we'll talk about some stuff Warren Buffett did to actually, it's an interesting positioning I think he's doing. We'll find out, but it could strike up a good conversation to say the least. I'm sure some people just don't know why he's buying some of these stocks. So I'm gonna do my best to at least start a conversation on why he's buying certain stocks and selling others. So anyway, have a good one, guys, and I'll see you tomorrow.